In this video, we're going to be talking about how the Federal Reserve may actually be responsible for either causing or saving the 2021 housing market crash.
Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers, and in this video, we're going to be addressing the question how the Federal Reserve may actually cause or potentially even save the 2021 housing market crash. Now, before we go ahead and talk about this topic that everybody's been speculating on recently, we have to address what the Federal Reserve responsibility really is. And it's in my opinion, if I were to summarize it in literally 5 to 10 seconds, that the responsibility of the Federal Reserve is to monitor and control the money supply. Now, the money supply is the measurement in which the amount of liquidable instruments and cash or currency is in a particular economy. Now, depending on where the economy is at, the Federal Reserve will increase or decrease the money supply through different aspects. So to visualize this, think about this road as kind of like our economy. Right now, there's no cars out on the road at all, right? It's Sunday night, everyone's out there watching football, and this is actually the road that I take to go from my place to my office. But now this is like right here, the road is like when the Federal Reserve is, pretty much not needing to do anything. The economy is doing great, businesses are doing well, people are spending money, and GDP is at a very stable, solid growth year over year. But imagine if there was 10 times the cars, or I guess 10 times zero is still zero. So imagine if there were 100 cars out in this road right now, there would need to be a lot more things done to better the flow of traffic. So a lot of times when the Fed prints money, think of it as you're extending the road. You're making the road a lot bigger. Now, one of the ways that the Fed will actually inject more money into the money supply and will better the flow of traffic, as we just talked about, beyond interest rates and lowering reserve requirements for the central banking system, is this thing called open market operations. Now, the repo market, as the terms become very popular in 2020, is a subset of open market operation. And to summarize this in layman's term for everyone to use, it's pretty much when the Federal Reserve purchases treasuries and bonds so they can inject more money into the economy. So imagine if you needed $5, right? You needed $5, and well, what I'm gonna do is I'm gonna say, hey, I love that book that you have in your bookshelf. I'll give you $10 for that book. That way you get what you want and I get what I want, which is debt, right? I get some type of asset and where you get the liquidity and you get what you're looking for. Well, this past year, they decided to take things up a little further by actually acquiring as private investors. And well, wouldn't you know it, in the beginning of 2020, the Federal Reserve balance sheet was at $4 trillion. And by the end of the year 2020, the Fed balance sheet was around $7 trillion. And well, it is my belief and opinion that because of that $3 trillion difference in the year 2020, a lot of that has been propping up the stock market and also including the housing market, as we're seeing record highs in terms of housing prices, while at the same time, we're seeing a lot of records being broken for the amount of delinquencies that are out there, defaults, and also mortgages currently in forbearance, along with all the evictions that are going to happen once this moratorium wears off. Now, this leads to us talking about whether or not the Federal Reserve could actually cause the 2021 housing market crash. And in order for us to do that and to build up, we have to look at the last time our housing market crashed entirely, and that was about 13 years ago in 2008. Now, let's look at the setup and the build up to how that happened. Step number one is you had these ludicrous mortgage programs in which everybody who pretty much had a pulse was getting a mortgage. They had these programs like the Ninja loans, which is the no income, the no job, no assets. And well, as long as you were a living, breathing human being, it seemed that everybody was getting approved for a mortgage. Now, these mortgages were being bundled up into securities and what's known as CDOs, collateralized debt obligations. Now, in my opinion, everything was fine up until this point. Well, afterwards is when the credit rating agencies started giving fantastic AAA ratings to these bonds and securities that were backed by mortgages that really weren't as strong. And because these securities were being given such great AAA ratings, well, this created a false sense of security. And this right here, I believe, was the big problem. Well, because this false sense of security, guess what? It allowed a lot of people to invest their retirement accounts, their pension funds, their investment money, and overall, a lot of dollars being put into these mortgage-backed securities. And well, this was the perfect setup for an inevitable crash. Help! Hey guys, sorry to interrupt the video. Ben Shapiro here. Just telling you guys to subscribe to the Kwok Brothers and like this video. I truly don't understand why people don't subscribe and like to the Quack Brothers. Studies show, research shows constantly. And this is why I don't like Democrats. Because for one, now in the last 5 years, we've seen some similarities. And it seems that a lot of lending programs and banks have already started being loose again. And well, to make matters worse, the degree in which businesses and real estate has been over leveraged in the last 5 years has also been record breaking. Now, I know somebody at this point might say, but Daniel, the credit agencies are not involved this time. It's not like The Big Short all over again and Ryan Gosling won't be able to do anything. And sure, that may be true, but I would actually argue that there is even a bigger false sense of security this time around because, well, looking at the $3 trillion that the Federal Reserve has added to their balance sheet and how it's propped up the stock market, the housing market, I would actually make the argument that it's a bigger false sense of security. And well, throw also in there the eviction moratorium, the low interest rates, and also the artificial boost in money supply. It would actually drive home the point even further. The housing market right now is kind of like a 16-year-old teenager living in Beverly Hills who lives life so recklessly and carelessly because she knows that mommy and daddy will just simply pay and take care of everything. Well, eventually she's gonna have to be an adult and she'll have to face the music eventually. Think of it also like this. If I'm a boxer, I'm gonna keep throwing a jab with the same power and consistency. Eventually the opponent's gonna get used to it. And that's kind of where the market's at right now. It's been growing and growing and growing for the last 5 years. But of course, that knockout blow is eventually gonna come. So now let's switch gears for a second and start talking about how the Federal Reserve may actually end up saving or preventing the 2021 housing market crash. Now, first and foremost, let me say that the only way the Federal Reserve can quote unquote save the 2021 housing market is simply doing the same thing that, the monetary system and policymakers have been doing for decades now, which is to simply continue to kick the can down the road. Having said this, the only scenario I see in which the Federal Reserve will actually save the 2021 housing market crash is if they themselves started owning real estate and start buying private real estate. Now, for a lot of you, this may be a bit far-fetched, but let's see what happened the last 12 months in the year 2020 with the Federal Reserve buying private equities and private securities. In a mere 1 month span, the Federal Reserve became the world's largest private investor with ownership of over 22,913 different securities, along with ownership in corporate bonds. So if they did that, if they became the world's largest investor in the world, well, what's to say they won't purchase the greatest investment that's been around ever since us humans have been around, which is real estate? Who's to say they can't get into ownership of single-family houses, apartment complexes, multifamily buildings, retail centers, self-storage office spaces, you name it? Who's stopping them and who's telling them that they can't do it? And well, because of this may actually end up propping up the housing market even more. And again, as I explained earlier, continuing to kick the can down the road. Because well, if you have one massive buyer in the housing market, that's obviously going to increase the competition and the amount of capital that's going to be participating in public markets of residential buildings, commercial buildings, you name it, therefore increasing the price even more than what it is currently. And well, if they do it in a smart way where it allows the prices to stay where they are and not drop and not go too high with the amount of money supply they inject into the private real estate market, well, that'd be very, very tough to do. And it would simply be, again, delaying the inevitable. Now, I'm sure at this point in the video, you're asking, well, Daniel, how do I respond to all this information? What is the action step for the year 2021? And well, I truly believe that with cash being trashed right now and the stock market being propped up by Mickey Mouse money, that the best thing that you could possibly invest in currently is cash flowing long-term rental real estate. So next Monday, the 25th, we'll be releasing a video talking about my personal top 3 favorite real estate investing strategies for the year 2021 and how to execute them successfully. So guys, stay tuned. Go ahead and watch that video. It's coming out Monday, 6 p.m. the 25th. Now guys, obviously there's a lot more to discuss when it comes to this topic of the Federal Reserve and causing a potential or saving a potential 2021 housing market crash. But I want to hear your guys' thoughts, right? Will there be even a crash happening in 2021? What is the Federal Reserve going to do? How are they going to respond? Are they even going to respond? What do you think is going to happen this year? I want to hear your guys' thoughts. And of course, as always, as my friend Ben Shapiro will say, don't forget to like this video and subscribe to our YouTube channel. It really helps us out in the algorithm and being able to push this information to as many people as we possibly can. So thank you guys so much, and I'll see you guys in the next one.